everyone, what's up? It's me again, Tutor Alwin from TTC for Igcse Accounting. And today we'll be talking about a very popular topic in your exams. Almost each sitting, this type of question will be appearing in your paper. Without this question, your paper will be seem boring and meaningless. And that's not really fun, without this topic. And guess what topic is it? It is none other than our error adjustments. Error 404. I know. For certain websites, if we surf into it, we can't load it because the website has gone or is being deleted for whatever reasons, right? Error 404, gateway error, error. And once there's error, we need immediate adjustments and corrections. So let's see what is error. Error, as its name suggests, means there are mistakes. Mistakes from where? Mistakes in our posting from our document into our journals, our cash books, our petty cash book, or the postings from our journal, the cash book and the petty cash book, i.e. the books of prime entry, into our ledgers. There are some mistakes. And from the ledgers posting into the trial balance, there will be, again, mistakes. So mistakes are bound to happen because human errors. Okay, we are not God. Okay, we do have times that accountants are not really that alert due to fatigue, due to busyness, and, could be also sick. Yeah, so once you're having headache, you lose your focus, and so you are bound to make some mistakes. All right, so mistakes can be obvious and also non-obvious. So let's talk about the first one, the obvious mistakes. First one, obvious mistakes. I call it obvious errors. Okay, what does it mean? It means that our trial balance, once we have produced them, all right, our trial balance doesn't balance. Debit is not equals to credit. For example, we have a sales here of, say, 1,000. Okay, then we also have a purchases of also 1,000 over here. And then we have cash of 1,000 over here. And then something will be missing. Okay, so your trial balance will be in a way such that debit side has 2,000. And then your credit side has 1,000. True? This is what will happen. And so, to make this trial balance some sort balance at the end of the day, okay, the accountant will slot in something called the suspense account over here, and put 1,000 over here. Then your trial balance will be sort of balanced in a sense. And this suspense, as its name suggests, mystery. So there will be mistakes to be identified. So you will become a detective Conan. You have to find what are the mistakes. Where is the missing link? Why does the trial balance doesn't balance? So therefore, a suspense account will be open like this. So a suspense account is a temporary account. When the trial balance doesn't balance, we will use the suspense account to do our investigation. Once the suspense account is closed, therefore, the suspense has been over and your trial balance is now adjusted correctly. So here's the suspense account. Okay, now let's say this is in the year 2025. Okay, this year. Okay, it's all on the 31st December, the last day somehow. Okay, so if there's a credit balance of a trial balance on the credit side, so we put here 1,000, and then we put it as difference in trial balance. All right, now it will be the investigation time. After thorough investigation has been found, has been done, and it is found that there's actually a cash sale, of $1,000 has only been debited to the cash book. So meaning they only do what? They only debited the cash. However, there's no credit entry. So by right, what was the correct ones? The correct one is to debit the cash and we credit the sales. But what was done is only cash has been debited, but credit wasn't credited. Okay, the sales wasn't credited. So now what we need to do? Okay, here's a correction. So we will credit the sales. So the missing link has been found, and therefore our debit will be the suspense account. This is how you do it. Okay, when you do the corrections, always find what is the correct transaction and what was done wrongly, and therefore the correction will be found, because this will be your main clue. So what's missing? Sales. So you just put in the sales and you debit the whatever is missing. Okay, whatever you've done here in the suspense. You open a suspense account, and so now you need to close it. Therefore, we will debit the suspense account with the 1,000, and therefore your account is now closed. The suspense has been uncovered by the sales of 1,000 bucks. And therefore, later on, you will produce another adjusted trial balance, and what will happen now is like this. Suspense is gone, and your sales will have 2,000, and therefore, there you go, trial balance has been balanced. Now, ever wonder where we will put these corrections at, where we will write them down? Have you ever guys wonder about this? Okay, so whenever we make any debit credit entries, okay, other than the cash books, yeah, okay, remember the cash book and the petty cash book is also a ledger, a debit credit, okay, so other than the cash book and petty cash book, do you still remember that we have something called the general journal? We use the general journal if that particular double entry could not be recorded in any of the cash book, petty cash book, the purchase, the sales, the purchase return, the sales return journal. You cannot record in any of these. Hence, you put it in your general journal as your last resort. Okay, the general journal will seem, the formats will be like this. There will be a date, there will be your details, all right, the folio for the accounts preferences in the ledger, the debit entry, and then the credit entry. So normally, the general journal will record, well, opening entries when we just started the business, or when we just started a new month as a fresh one, the assets put on the debit side, liabilities and capital on the credit side. Okay, so a general journal will be look like this. Another entry that we put in our general journal, okay, could be these errors and the previous adjustments that we learned about the depreciation, the provision for depreciation, irrecoverable debts, disposals, okay, and all the other adjustments for income and expenses for the prepayments and also accruals. Okay, all the adjustments is done in the general journal. So date, okay, let's say this is 2025, December 31. Okay, we done this correction, so therefore we put suspense account over here, suspense account, and then there's a sales account over here. Okay, we write 1,000. Okay, so omission, we can write we need to write a narrative. Okay, so this is a narrative. Over here, we're going to write some short sentences, meaning to say, we need to explain what we are doing over here. If not, there will be confusion and people will not be clear, okay, what is it that you are recording about? What's this double entry for? Okay. So we can say cash sale, sales entry for cash sales omitted, now corrected. Something like this. And done. So general journal, we have opening entries for the month. We also have for adjustments and corrections. We also use general journal to record special transactions. It can be any kind of transaction, such as when you purchase a non-current asset on the credit terms. All right. Then there's also many more. To be honest, there's a lots more, and in which also you'll be learning them next time in your university. Okay. Opening entries. We also have the year-end transfers. Okay, so these things like these and special transactions will be covered in my class for further details later on. Okay, so this is the general journal, one of the books of prime entry. Okay, this is for the obvious error. Okay, now how will these affect your profit? One of the cool thing here. So profit. So let's use this. So previously, let's say our profit before adjustment was 5,000. With these sales that we just made, the adjustments, when we credit the sales, our profit increase because the sales is a kind of income. So our profit will be added. Okay, cash sales omitted 1,000, and therefore your adjusted profit. Cash sales entry omitted. Maybe you can say sales entry omitted. now we have 6,000 adjusted profit. All right. Now, the next one. Obvious errors. If just now we have obvious errors, then we will have the non-obvious errors. If the error just now leads to an imbalanced trial balance, the second type will be your trial balance is balanced, but still an error is present. Okay, let me give you an example. We have trial balance over here, debit entry, credit entry. We have a purchases, 2,000, and a trade payables, 2,000 over here. Okay, our trial balance is still balanced. Good. However, little did we know that there is something missing. And what is that? We found out that, okay, for example, a commission receivable via check, okay, of 3,000 was completely omitted. So what will happen? Oh, you completely omitted. Now, the previous one, we talked about something omitted. It's a partial omission. We debit something, but we didn't credit something. This is partial. But what is it for this now? This one is where our debit and credit entry wasn't present at all. There's no debit and no credit entry. This was the mistake. So the real transaction was commission receivable by check. So when you receive something by check, so therefore you debit your bank of 3,000 and you credit commission receivable 3,000. So once this happened, what to do? We have to do it. We have to make the debit and credit entry for bank and commissions receivable. Okay, so what we need to do is our general journal will record these ones. So commission receivable completely omitted, now corrected. And therefore, your trial balance will have another new one. And it will be like this. So you have a bank, 3,000, commission, on the credit side, 3,000. Therefore, your trial balance is now balanced, 5,000. And so how will the effect on the profit? Let's say a profit before adjustment was 10,000. Then for a commission receivable, you're supposed to receive, meaning your profit should add up. So now you already corrected, so your profit will have to go up now. So you add commission receivable that has been omitted, 3,000. Therefore, 13,000. And this is your adjusted profit. Okay, so as long as there are errors happen on both sides, either both side is missing or both side has been overstated or understated, your trial balance will still be balanced. However, it is wrong. And you have to use your journal to do the double entry corrections. Now, one thing is not here. For non-obvious errors as such, we do not use the suspense. We only use the suspense account during which one-sided is wrong. One side is correct, one side is wrong. Okay? So there's a missing. It's like it's a single person. Because double entry should be a pair. But for suspense, someone being a single, someone being neglected. So this is obvious errors. And our non-obvious errors, one of which is a very, very popular in your exam. Okay? So that's all for today for errors, very simple ones, yet effective in your learning. And I hope it can help all of you. And so I shall see you all in our next coming video. And ciao. Okay, bye-bye.